Hey guys, welcome back to the channel. My name is Rob, and today we are going to be talking about the top 20 stocks to buy for 2030. And recently a report was put out by Co2 that really highlighted the top 40 stocks for 2030. And a lot of those were not investable by the normal person because you need to be like in venture capital or something to do that. They're not publicly listed companies. So we're going to peel those out. There were a lot of other ones that were also foreign companies that are difficult to invest in. I'm going to peel those out as well and bring you today the top 20 companies that should bring the highest return according to them between now and 2030. So we're going to go through those. There are a lot of us that are still looking for some growth in our portfolio. And the way that I'm going to play this is just pick out the companies on this list that I like and invest a little bit of my portfolio in each one of them, create my own mini tech ETF. Because what's interesting about this is you will note that there are some companies missing, like Apple, Visa, and MasterCard, because they do not expect them to do well in the coming years. Now, before we get into that, though, as always, I do need to remind you, I am not a financial advisor. Please do not take this as financial advice. Please do your own research and make your own decisions. So let's jump into this list because it's pretty exciting. They expect this list of companies to account for most of the gains in the stock market over the next 5 years. And these are companies that you will want to be invested in if you want to participate in that as a growth investor. And as I said before, we still have our dividend portion of our portfolio, but because we still have a few years until we need to live off of this, we are going to put some of this into a growth portfolio as well. So let's jump right in. And the first company we're going to be looking at here is Microsoft. It is expected in 5 years that Microsoft will be the largest company by market cap. And they have a price target here on TradingView, current price $477. The price target for the 1 year is $515.98. Now, we all know what Microsoft does. This seems like a pretty good company to put into your portfolio. Not only is the 1 year target looking good, but it is supposed to be, according to Co2, the largest company by market cap in 5 years. So that one definitely going in. These are all going in, but some of the ones that are not in there, I will be bringing you more information on that as well. Next up, let's look at NVIDIA. And NVIDIA, kind of the same story as Microsoft. They're showing here a 1 year price target of a 19% gain, currently at 143, price target at 172. These are expected to be the two biggest companies by market cap, Microsoft and NVIDIA. We're not going to spend too much time on these because we have more interesting ones to get to. Third, interestingly, I do want to point out is Bitcoin. Co2 does expect Bitcoin to be the third largest asset, just behind Microsoft and NVIDIA. So if you don't have Bitcoin in your portfolio, this type of idea could be a good way to get some of that Bitcoin in there. Next up, we do have Amazon, and Amazon is going to be the third largest stock, fourth largest asset. It does currently have a price of $209, 14% upside for this year, but a lot of upside over the next 5 years as AI comes into play. So Amazon is one that I am definitely adding to my little basket of tech stocks here. Next up is going to be Meta, excuse me, and Meta priced at $682. Very limited upside for this year, according to TradingView, 3.2%. But that doesn't tell the whole story because we are not looking at this in a 1 year timetable. We're looking at this for a 5 year timetable. And I want to buy these stocks. I want to buy, let's just say you want to buy $1,000 of each of them, or you could buy $100 of each of them. You'd be putting either $20,000 or $2,000 into this, however you want to do it. And then just leave it alone for 5 years. Let it grow. Don't worry about it. And I think when you come back 5 years from now, if you're investing in the 20 stocks that are expected to be the largest market caps and the largest gainers over the next 5 years, you should be doing well with this investment. by the time that 5 years is up. So don't mess with it once you get this invested. Next up, Taiwan Semiconductor. And Taiwan Semi is priced at 209, 6% upside for this year. But as you may know, Taiwan Semi has a major upside for the next 5 years because they are the main company producing chips for companies like NVIDIA. Then the next one's going to be Tesla here. Now you do see Tesla priced at 322 today, priced at 306 on the price target for the year. So that's a 5% decrease. And I would like to pick Tesla up a little bit cheaper. I don't know if you'll get the chance to do that, though. They did just roll out their robo-taxis in Austin yesterday, and they're getting quite a bit of hype on that. Of course, Tesla is not really just a car company anymore. They are more about autonomous driving, the robo-taxi, and the humanoids which are coming. So it is still a good investment in my view, even if you're paying a little bit of a premium right now to get in, but it would be good if you could get this at a little bit lower price point. And that brings me to another point about this is you could go about this all different ways because you're not buying an ETF. In an ETF, you buy the ETF, you're basically buying a fraction of every share at the same time. You could buy this, you could buy Microsoft and NVIDIA and Amazon today and then wait a few months for Tesla maybe to come to a better price and just buy each stock at the price you want, which is a good way to also do it. So let's look at the next stock here, which is going to be Broadcom. We do have a price target increase for the year of 13.79%. Broadcom, again, going to be supported well by the AI boom. And I do believe that the AI hype is real and that AI is going to revolutionize a lot of the things we use and a lot of the world. And I do want to be fully invested in AI when that happens. This is not the kind of revolution that comes along every single year, and I do not want to miss this. So that is one of the other reasons that I am putting this little list together, and I'm going to be purchasing some of these today and throughout the next few months as some of these go on sale. After that, we've got Oracle, another company really benefiting from the AI trend. They do show only a 3.9% price target upward adjustment for this year, but I think going forward, Oracle has huge advantages that they're going to be able to take advantage of, and they're going to see pretty big gains coming in the next 5 years. Next company, as far as market cap, according to Code2, is going to be Netflix. Not really an AI play, but just one that is going to grow, and it's already pretty big and will continue to grow. Negative 1.89% for this year, but they do expect them to do well over the next 5 years. I think Netflix is a good one. You can also go after this in a many number of ways. You could equal weight all of these. I am not going to equal weight them, though, in my portfolio that I'm putting together. So shares like Netflix that I don't have as much confidence in, I'm only going to buy half as much as that as I am shares like NVIDIA and Microsoft, which I have full confidence in because I'm really not sure what Netflix is going to do. And this is one where it is expected to grow. All the analysts say it's going to grow. Going to be one of the top 40 companies in 2030. So we're putting it in the basket of stocks, but I'm not giving it a full weighting. Now this next one is supposed to be the highest growing stock by CAGR over the next 5 years, and it's ARM Holdings. And you can see that it has run up quite a bit over the last year, which is why the price target for this year is only negative 3.3%, but it is supposed to be the biggest gainer over the next 5 years, which is what we're looking for. And again, why we're going to buy these and then not get too concerned about the price over the next year. We're not going to look at it. We're not going to worry about it. We're going to buy this. I'm actually planning to put about $50,000 into these stocks, let them sit, and come back in 5 years and see what happens. Hopefully in 5 years, if you're watching this video in the future and this video is 5 years old, leave me a comment. Remind me to do a follow-up video on how these stocks did, because I will want to do that 5 years from now. And I think it's going to have done pretty well. I think ARM is going to be one of the ones that did pretty well and carried the day. Hot stock up next, which is Palantir. And Palantir is sitting at $137. Now, the analysts, 21 analysts, have a price target on it of only $107. So negative 22% for the year. So this is the kind of stock where you have to make a decision. Palantir is expected over the next 5 years to be one of the biggest growers, but it is fairly overvalued right now. So do you want to buy it now, or do you want to wait and see if you can pick it up at a cheaper valuation down the road? I am probably going to put part of my money into Palantir now and then hope to get some of it at a cheaper valuation down the road, because it is at a pretty high multiple at the moment. We do have the next stock, which is going to be ServiceNow. ServiceNow is running at $971 and has a price target of $1,092. 12% upside for this year. But again, we are looking for 5 years from now, and it is one that I think is going to grow more than other people do. So I'll be putting a full allocation into ServiceNow. Then we have ASML, ASML Holdings, and it's got a price of $756, price target of 12.61% for the year. I do have quite a bit of ASML. This is the other thing you need to keep an eye on, is in your ETFs that you also hold. I do have the semiconductor ETF SMH, and so that gives me a pretty big exposure to the top semis like Taiwan Semi, NVIDIA, AMD, ASML. So I do need to be careful that I'm not overweighting myself with these holdings. So check your other ETFs. If you have some of the Vanguard ETFs, some of these may be in there at a pretty high weight, and you want to make sure that you're not just doubling up on those if you're going to buy positions on all of these stocks like I am going to do. So I want to take a moment now and talk about a couple of the stocks that we've skipped over, that because this is going by market cap, from what is expected to be the biggest market cap to the smallest market cap. And by now we should have already seen some companies. We should have seen Apple in the top 5. Apple is nowhere on this list. So Coatue is saying that they do not believe Apple will be one of the top 40 companies in 5 years. And that's pretty shocking. But when you think about it, it does make some sense. And something I've been saying for a long time is that Apple is not innovating anymore. They are a phone company. And what makes them any different right now than Samsung? Other than their really high user base, people are upgrading phones less and less, and they have completely missed the AI segment of this market. And that's the kind of thing that's very tough to recover from for a company like Apple, because their growth prospects are very, very limited. Now, they could surprise us all. They could buy an AI company like Perplexity or like OpenAI, and if they did that, they'd be right back on this list, because that would probably move them up over the next 5 years. But as of now, they have no plans. They have not said they're going to be buying an AI company, and so they are off the list. Also, Visa and MasterCard are off the list, companies that I've loved over the years, because we just don't know what's going to happen with the stablecoin bill coming in. Money is going to be moving in different fashions, and Visa and MasterCard may be winners in that space, but they haven't really told us what they're going to do, and they may not be winners. So there's a lot of uncertainty with Visa, MasterCard, and Apple if they can regain or maintain their position as the top companies in the world. So for now, they are being skipped over on this list. And that is one of the reasons I've had a hard time investing in things like QQQ over the last year, is because Apple is so heavily weighted in QQQ and in VUG that you really can't buy it. And when you add up what Apple and Visa and MasterCard and a couple other companies that are not on this list, like Adobe, it's almost 20% of your money that is kind of dead weight when you're invested in those ETF funds, because those are companies that I'm already expecting not to do well over the next few years. That's why I do like this approach better of buying individual stocks. I can buy the stocks I only want, and I can buy them at the price that I want to buy them at each individually. All right, next company up is going to be Intuitive Surgical. They are seeing a price increase of 13.77 for the next year, according to analysts. And that is one that I do not think I have much exposure to any other place. So I will give that one a full weighting. Shopify, I did question whether I was going to put Shopify on this list. I did end up including them. I didn't have a better one on there, and they are expected to do well. So I did end up including Shopify. I think that for the AI play, I do really like GE Verona. They have run up here quite a bit, as you can see here in the last year. So their price target for 1 year is only negative 3.18%. I would make sure that I get this one at a good price. Don't rush into it, but I definitely want to keep that one on my list and part of this portfolio. Then we've got Applovin. And this one's kind of crazy. The 1 year target on Applovin, it's at $324 right now. The 1 year target is 49% higher at $484. And so Applovin is going to get a full weighting because I am not exposed to Applovin at all so far. And it is a great AI play. Then we've got CrowdStrike, which CrowdStrike is interesting because they really had a bad year last year, but they have recovered. And there's a small increase in the price target this year of 1.19%. It will be going into my portfolio. And we've got Mercado Libre, ticker symbol MELI, and it has been one that has been growing. I wish I'd picked this one up back when it was about $2,000, $1,800 earlier last year, but did not pick it up. So now I'm going to buy it at a little higher price. Price target 20% higher for the year, but it is going to grow to be one of the top companies in the world, according to this report. So those are the 20 companies that I am peeling out of this report of the top 40 market caps 5 years from now. And I think this is a pretty good strategy. You do want to have exposure to the top companies, the companies that are expected to have a lot of growth. Again, though, the strategy here is not to buy and sell, not to trade, not to get in and out of these. It's to buy these 20 companies, let them sit for 5 years, and see how they do. They're going to go up, they're going to go down, there's going to be swings both directions. But by the end of it, we're hoping and we're believing we're going to have more winners than losers in this. And overall, we expect to see a very good return for our money in these companies. So guys, that is my next investment. That's what I'm going to be investing in this month. I'm going to be spending most of my month getting my money into these companies. And then I'm just going to sit back, see how they do, hopefully check back in with you in 5 years and let you know how it all turned out. Hopefully, if you're invested with me, you can follow along with me here on the channel. So if you like this video, guys, please give me a like, subscribe to the channel if you haven't, and I will see you on the next video.